Good morning. Welcome to Thai Sustainability Summit, the largest summit hosted by Thai Hyderabad. We have around 40,000 registrations and growing. This is Suren, Thai Hyderabad charter member and co-founder Loginsoft India. I'm excited to introduce the topic for this session, the path to sustainable micro entrepreneurship. We have put together an amazing spread of wonderful speakers from various expertise, and this session is moderated by Viiveck Verma. Viiveck Verma is a Thai Hyderabad charter member and a founder of UpSurge Global, a management consulting firm, and is also a venture partner with Venture Catalyst venture capital firm. Viiveck Verma is also a mentor to multiple startups, an advisor to brands, and a business strategy consultant. Viiveck is considered as a trusted leader and change agent with a superior track record of motivating people right from the grassroots level and taking subordinates into confidence for implementing new and innovative ideas. Dear Viiveck, glad to have you. Please take over from here, introduce your panel, and I'm looking forward to an exciting and insightful session. Thank you all. Enjoy the discussion.
Thank you very much, Suren. Thank you for that wonderful introduction. And yes, I am equally excited to be listening to some of the stalwarts who are with us on the topic of the path to sustainable micro entrepreneurship. Yeah. Sorry, I said, let me start by introducing the stalwarts that I have with me, though all three of them don't need any introduction, but it will be great injustice if I don't at least speak one or two lines about each of them. So the first panelist we have is Mr. Vijay Mahajan. And like I said, I don't know if there's anyone in the country who doesn't know Vijay. But Vijay was the founder of the Basix social enterprise group and is currently the chief executive officer of the Rajiv Gandhi Foundation. He is also the director of the Rajiv Gandhi Institute of Contemporary Studies. And there's so much more to Vijay, and we'll hear when we get him to speak. We also have Mr. Emmanuel Murray. Emmanuel leads the market development and the institution building efforts with focus on food and agriculture at Caspian. And he has very rich experience with Oiko Credit and NABARD. And we'll again hear a lot more from Emmanuel. And last but not the least is Vidya Chandy. Vidya is a vice president impact at Chirati Ventures India Advisors. She brings with her a 17 years of very rich experience in fintech, and then the last 4 years in the impact sector. And she has, in her past, worked with organizations and brands like Game, Mahindra Comviva, Nokia, Intuit, UboPay, and Sangrand. So she brings a very rich global experience, and we'll hear some amount of wisdom from her, coming from her experience. So that's just a little justice that I could do, like I said, with a line or two. But I'd like to start with Vijay. If you can talk a little more about the work you do and maybe introduction about your work from your perspective. Maybe if you could take a couple of minutes and then we'll go around the room before we start the question. So Vijay, over to you.
Thank you, Viiveck. This is a very particularly special year in which one should address the topic that we're addressing. What can lead to a large number of sustainable micro entrepreneurs. And the reason why that is so, let me just underline, is that we've all gone through an incredible period in human history, the entire world and the entire history that we know. And lots of people have lost their means of livelihood, whether they were in rural areas, whether they were in urban areas, whether they were employed in the formal sector, whether they were employed in the informal sector, or whether indeed they were already micro entrepreneurs. So as the economy now takes off again, if we have to prevent it from becoming what's called a K-shaped recovery, which is that a small part of the economy, the top 10%, is really zooming up, as you can see from the Sensex, and the rest of the economy is going southwards. And if that is so, then the answer is to create more inclusive growth. And the way to create more inclusive growth is not to create more jobs in the old sense of the term, because the way technologies have changed, the way cost economics have changed, the way people's work habits have changed, the way the geographies where people are available, where work is available has changed. and the way connectivity has improved, we need to now actually think of a different architecture of work, and that would be largely self-employment. And if it is self-employment, then that means micro-entrepreneurship. So I have, without using exactly the same words, I have been broadly doing the same work 40 years. Soon after I finished IIM Ahmedabad in 1981, I felt that I should address myself to the issues of poverty and inequality in this country. And it's been really 40 years since then. And I've tried to promote livelihoods. And in one's early days, one thought that the public sector banks were providing credit. So we just needed to provide training and market linkages. But 10 years of that, and I realized that we also need to provide credit because the banks are fairly reluctant. And 20 years of that, and then I feel that those two are necessary, but you need something more, something deeper. And I'd like to come to that in my next intervention, Viiveck.
Thank you. Thank you, Vijay. And that's a very good context. And I think a lot of places people are talking about, at the last count, I'm told there are close to 6 crore MSMEs registered in India. And I think that's still a number which is still being discovered and still needs to grow a lot. So, even if, just taking what you said forward, if even if one of them employs 10 people, we are talking about phenomenal opportunities that will get created. So thank you, Vijay, for setting that context. And maybe Emmanuel, if I can come to you and get you to speak a little about the work you people are doing, and then we'll come to questions.
Yeah, thanks, Viiveck. Broadly, I think just like Vijay, a large part of my career has been spent in the space of rural credit and development as such. And over that period of time, I have been amazed seeing the amount of entrepreneurship that already exists in rural India. And we call it very differently as the informal sector, unorganized sector, and all these kinds of terms. But when NABARD, where I spent a large part of my career, got into the self-help group program and started funding women, we have seen transformational change in terms of a large number of these women transforming into entrepreneurs. And then some of them going to scale. So seeing that, visibly over a period of time was really exciting. And close to, I would say, 20 to 25% of people who have been touched by self-help group program have been able to become businessmen or businesswomen and create jobs as well. And I think a little bit of that here and there we have documented, but a large amount of that is undocumented. And of course, you have the microfinance program running in sync as well. So broadly, that is where I come from. And I believe there's a lot that micro entrepreneurs do largely unrecognized.
Absolutely. And I think that's the discovery as a nation we need to do. And when I was having a conversation over this weekend with a leading gentleman from the development sector, and a sentence he made kind of stayed with me. He says, we look at a farmer, who's able to look at 10 different crops of rice and is able to discover, is able to identify, he has so much knowledge. But when we bring him to the formal quote unquote sector, we call him an unskilled labor. And then we believe that we skill him in becoming a carpenter or a plumber, and then we call him a skilled labor. So this whole game needs to change. But here we'll talk a little more about it. So Vidya, over to you, and let's hear your perspective and context around this topic.
Thank you, Viiveck, and very good morning to everyone, and pleasure to be on this panel. Personal anecdote I'd like to start with is, when I was in the 12th standard, I actually applied to ILMA, but for whatever reason, I couldn't go for the interview. And instead I went into the computer science, and, long history short, I spent, almost 17 years in technology as a technologist as well as a product management leader, starting with BFSI, but moved to mobile payments in 2007. And through OvoPay launched the second product, mobile payments product in Kenya after M-Pesa. Now, with mobile payments, I got, a very good exposure to the kind of power that technology can create for the unbanked and underbanked. And I think that impact of what technology can do stayed with me for a very long time and has really formed and shaped a lot of what I do later on. In 2015, I was really interested in a transition from what I call the world of bits to the world of atoms. So I took a sabbatical. I had already been in the mobile payments field for about 7 to 8 years at that time. So with demonetization and everything, then the world was just starting to wake up and India was just starting to discover mobile payments. That's when I took a sabbatical and I started working in the rural development area with a village near Bangalore, working on holistic rural development across many different areas. And one of those areas was livelihood generation. Now, of course, we are all interlinked. And I might touch upon that particular initiative later on. But what I found is that I had immense satisfaction from the work that I was doing, and I knew that this is a direction I wanted to take and blend impact with technology going forward. I joined GAIN, Global Alliance for Mass Entrepreneurship, which had at that time been started by Ravi Venkatesan, Nikin, and Madan Parakhi. And its mission was to do exactly what Vijay and Emmanuel are talking about, which is switch the narrative from job seeking to job creating, switch the narrative from self-employment to job creation through becoming what was coined as a term mass entrepreneurship, with the ability to create at least 5 to 20 jobs each, and with a special focus on women as well. So that was the mandate. I was the first employee, and we set up the theory of change, etc., set up as a collective impact organization that's looking at it from a systems perspective. And the realization that you need, an entire ecosystem to bring this to fruition is what led to my next change, where I am now at. It's with Chirati Ventures, previously known as IDG. So we are a mainstream technology-focused VC operating in India with about $1 billion assets under management. And with we've made about 100 plus investments across various sectors. A lot of them are creating tangible impact on people and the planet. So what I do is I head up the impact practice at Chirati, where we look at the intersect of what our companies are doing at the intersect of technology and impact. And one of our development impact thematic areas of focus is MSME. Another is gender. Third is reach to people who are underserved, or either from a segment perspective or from a geography perspective. And the fourth is employment and employability. So looking at all these aspects, what is the work our portfolio companies are doing, and how can we accelerate the impact that they are creating? So that's what we are doing now.
Thank you very much, Vidya. And a very interesting perspective you bring. And I think between the three of you, we will get our audience a fairly good view from multiple perspectives as we spend the next 35-40 minutes. So Vijay, given the fact that you are considered the doyen of this industry, the whole MFI, and started off, like you said, very, very early, and you've seen this sector transform itself. So how do you see, what's your view on the kind of millions of mini entrepreneurs that this sector has created? What have been the lessons? What are the success factors? So talk to us a little about your journey as you've seen it over the last few decades.
So Viiveck, before I answer that, let me just make a distinction between 4 different situations of working by a person. So there is salaried or wage employment. For most people that we are talking about, it's wage employment. Then there is a new type of employment which I call micro-franchising. Where basically though you are self-employed, but you have a big brand behind you. You may be running a branded shop, or you may be a repair worker or a services worker, where there's a sort of supply chain and a brand behind you. So that is what I call micro-franchising. The third is where you're self-employed, But basically, you're, in fact, when you mentioned there are 6.3 crore what are called own account enterprises, they are not really anywhere close to MSMEs. The average employment, by the way, is 1.6. Okay, it's nowhere close to 10, unfortunately. So, and 90% of them are basically proprietary firms. So, and roadside street vendor is also included in that category. So these are self-employed. And the fourth category is what we are saying, which is the micro-entrepreneur. And in my definition of micro-entrepreneurship, you are not only self-employed, or not only you and your family, but there is at least one hired worker. And in economics, in economic statistics, that's when you cross from being what's called an own account enterprise to an establishment. This is how the national account statistics is kept, by the way. So at least one hired worker. Now, when it is said, and I'm glad that you identified me as one of the pioneers in microfinance. So therefore, let me tell you that microfinance is highly overrated. It does many good things, but it is not a major creator of entrepreneurship. 90% of microfinance loans go to existing enterprises, primarily for enhancing working capital, sometimes a small term loan to add some equipment or so forth. Very, very few microfinance loans go for startups. So in that sense, unfortunately, microfinance is not a great answer for promoting new micro-entrepreneurship. Okay, it's a great answer for supporting existing micro-entrepreneurs. So then what is the answer? So the answer is twofold, but if you staying with the financial side, I want to mention that just as in any startup of any size, even at the micro size, the risks are so high that it is completely wrong to finance startups with debt. If you finance startups with debt, both the lender as well as the borrower will go bankrupt, a large percentage of them, and it is the wrong financial instrument. So what is the right financial instrument? The upper end of the financial world and the enterprise world has discovered it long ago. It's called venture capital. There are different stages. There's the angel stage, there's the early stage and all that, but it's all basically venture capital where you invest in 10 entities and you hope that 2 or 3 will give you a large enough return that if the other 6 or 7 fail, that's okay, right? And that's how, whereas if you started doing venture finance, but using debt as a method, interest as the payoff, then you will have to assume there is a 70% failure rate. Then to break even, you will have to charge an interest rate something in the range of 90% plus, which is obviously not feasible. It won't be acceptable to anyone. So what is missing? And I had in a pre-discussion, I had mentioned this to both Emmanuel and Vidya, a product that is missing in the whole financial world is what I call micro equity. And unless we collectively, as a financial sector, come up with a micro equity offering, there is no way that the microfinance sector can promote a large number of enterprises. We can certainly support a large number of existing enterprises. There's another very important requirement, but I'll come to that in my next intervention.
Thank you. Thank you, Vijay. That's a very interesting concept, and we will pick a little more on that as we go along in this conversation. And with that, Vidya, coming to you, and from your experience, which is very different, and when you were doing your introduction, the thought that came to my mind is that you had chosen earlier to take the shortcut to go to IRMA, but the fate had something else for you to say, no, you have to take the long road, spend 17 years in the corporate world, and then come to the impact sector. So your shortcut didn't work. But from that experience that you had over these long years in the corporate sector, in the private sector, and then kind of moving into the sector you've come in now. So what is your perspective coming from that vantage point, and what sectors do you think is where the future lies when you look at these? And you have enough experience from your game time that you spent with game, where you interacted with a lot of these people, especially at the grassroots level. So what's your take? What sectors? What do you
So, Vivek, lots of questions there. Let me break it down and start by, I'll refer back to the corporate experience, etc. later. That was, of course, in a very different context in the US and India and in IT product world. But, when I look at our learnings at Gain, when we started to understand what the landscape was, what was broken and what was needed, I mean, clearly systems thinking was missing, right? The entrepreneurial journey itself was broken. There were a lot of initiatives, government or CSOs, very little private market focus really at the time that we were doing this work on trying to, I would say, improve the situation for micro entrepreneurs beyond partnering with them. So there were obviously, issues with hand holding, there were issues with skilling, there was issues with financing, market, the programmatic interventions that, CSR was, tending to do really did not work. You needed long-term hand-holding, long-term engagement for what is known as entrepreneurship development. And more importantly, the entrepreneurial mindset, the ability to, have entrepreneurs build resilience, that was very crucial. Vijay mentioned the different kinds of entrepreneurs. I think that's a very, very interesting and relevant point because there is a distinction between necessity entrepreneurship and intentional entrepreneurship. There's a lot of people want government jobs. Very few people want to take that jump because the environment is not conducive for them to start out as entrepreneurs and grow to the level where they start small but they're able to employ people, and that kind of creates a fantastic effect of engaging, employing, and economic benefit for everybody. Another thing that came out was sector-specific focus and design was also missing. And I'll touch a little bit upon that, later in the conversation when I speak about some of the examples of what our portfolio companies are doing in various sectors. So what came out is that the role of government, civil society, and private market is absolutely key to sustainability for micro-entrepreneurship. And that brings me to one of the biggest pieces of sustainable micro-entrepreneurship is the role of the private market. So how can market forces and product market fit being able to determine sustainability and success? I touched upon Chirati and its role earlier. But when we look at our development impact themes of micro-entrepreneurship, today we've begun to measure. So we are in our 6th cycle of measuring impact created by our portfolio companies. And we know, and these are figures as of March earlier this year, our portfolio companies, 17 of them, the active portfolio across 2 of our latest funds, which are integrated for risk, have benefited more than 200,000 MSMEs and another 100,000 and plus SMEs beyond that. 58% of these are in tier 2 and smaller towns. And these are across sectors, be it for fintech, where we are benefiting 70,000 MSMEs, be it agri-tech, where we are benefiting smallholder farmers by providing them with quality inputs, with advisory, with post-harvest infrastructure, market linkages, financial linkages, with small business growth sector, where $200 million worth of transaction value has been unlocked for the MSME sector in India alone. Logistics and mobility companies, startups which have facilitated more than 10 million trips for logistics and mobility, MSME partners, and on the health tech side. So the value that these portfolio companies are bringing to MSMEs are across the board, whether it's by facilitating credit through the data that they're gathering or the business that they're providing them, whether it's through demand aggregation, through backward and forward linkages, helping to build capacity and the infrastructure, helping to develop the supply chain and lowering cost of goods, building the quality of service and standardization, and of course, digitization. So the value and benefits are tremendous. So I'll take a pause there, Vivek, and hand it back to you.
Thank you, Vidya. And I think there's so much going on. So what you started with, what role can private sector play? What role can venture firms play? And I think that's a fantastic example. And we'll hear a little more about some specific examples out of these startups or entities that you people have funded. But before that, Emmanuel, coming to you, what is in your view, what impact focus areas like skilling, affordable housing, rural healthcare, how can these areas which need scale, which needs to really grow, what lessons, what can we learn from these sectors? How your view of what can the entrepreneurs really do to build successful ventures in this space where the impact can be created? Because a lot of noise is being made around these sectors. So how do you scale them? What's your take on that?
Yeah, so let's go sector by sector. So affordable housing, basically, I think microfinance institutions have built the delivery channels. So you really do not require to have another channel. But in terms of financing housing, you require long-term funding, not the kind of funds that these MFIs give of a 12-month or an 18-month loan. And in that sense, some specialized institutions have come up, but I think scale continues to be the challenge. And in rural India, generally, housing is done in a modular fashion. So people build a unit room by room, and they're not looking really to build based on debt funding for housing. On the other side, when you look at affordable housing as creating housing stock, and that's where we have been there as Caspian, we find that our understanding of the need itself has gone wrong. We think that people are looking for a single room house at an affordable cost, and therefore we build it some 40 kilometers away from the city because land prices are high, and then they are left unsold. The aspirations of the poor are close to the middle class. So really, we got the thesis wrong on affordable housing, and we need to understand that and accordingly design suitable products to match that requirement. And that needs to be looked at. On skilling, I think the core of skilling is the ability to put that skill to use once that skilling is done. So from NABARD or from SIDBI, we've done millions of these training programs, entrepreneurship development programs, skill development programs, and heavy investment funds have gone into it. But trying to convert those into jobs or into enterprises has been where I think the challenges are, and it is recognized that maybe 10% of those really would get transformed. So what are those skills that the market requires, and trying to build appropriate skills that really immediately can be put to use is the core. A lot of startups are working in this space, doing a lot of fascinating work. Unfortunately, again, I think a lot of the programs rely on government funding, which again is unreliable. We see skill development startups having receivables running into crores of rupees unpaid for years. So skill development largely has to, I think, be self-funded by people who really require those skills. In places like IT and others, we're seeing spectacular work by some of these startups. Competitive exam trainings, these kind of things, I think, have picked up greatly, and a large number of very promising startups and highly investable are happening. In rural healthcare, it's a sensitive space, because you're dealing with human beings. So a lot of these products and technologies have come into place, but before they are actually rolled out, they need validation, certification. Ultimately, you need a doctor or somebody to approve and to deliver these, to license these over there. And again, there, I think if the microfinance program claims the reach that it has, basically the clients of theirs are really the target for healthcare. So if you really can have service models where you tie up with medical services to deliver these services to the people you have itself, it will be a great reach. The second thing, I think, is the insurance side of healthcare. So the ability on a large scale to provide insurance that is both accessible as well as available on call, on need. When it can be extended on a large scale, I think there is a great deal of possibility. So large number of startups in healthcare doing spectacular things, but all these products need some degree of checking, validation, tying up with the medical delivery system before that can be taken to scale. Who's going to pay for it is a question. That is the one thing, and who's going to take the interest in reaching it out is another question, but there's a lot of potential lying there also.
Fantastic. So I think, clearly opportunity seems to be there, but we need to work on a model. We need to have a better understanding of the needs. So there is fair bit of work to be done, and we'll come and speak a little bit in a few minutes with Vijay about the new model that he was talking about. But before that, Vijay, I want to touch on a slightly kind of topic which is away, which is about failure. And a lot of people have this notion, and especially when they're talking to someone like you and they've seen so much success, that this has happened, you've transformed a lot of things, the industry has come up, but I'm sure that journey hasn't been easy. And I'm sure the journey, unlike many people who what they think may not have been all successes, I'm sure you encountered failures along the way. And I want you to talk to us a little bit, because I think that's an equally important aspect for entrepreneurship as a whole, whichever one of the four, or at least the three of them, if you leave the salaried employees aside. It's a very important piece. So I would like you to talk to us a little bit about what's your journey been, and how have you looked at successes and failures, and what could be the lessons you learned, and maybe through you we can learn.
So Vivek, actually, I am a champion of failure. I think the so-called successes that I have are actually relatively few. To be precise, the Basix group itself is what I used to call my cricket team. There was a holding company, Basix Limited, and then it had 11 subsidiaries, of which one was a local area bank, one was a NBFC, and one was a business correspondent company. So 3 were into financial services. Another 4 were into all types of support services, the kind that Vidya and Emmanuel were talking about. So one was in agriculture, Basix Krishi. One was in vocational training, Be Able. One is in urban solid waste management, and so forth. So and then there were 3 non-profits. One of them was serving an R&D purpose, one was serving a training purpose, and one was an international non-profit subsidiary, which worked in about 11 or 12 LDCs. So now that was, these were set up between 2000, earliest was 1996, but the last one was set up in 2011. And as on date, 4 of those have folded up. So 4 out of 11 have folded up completely. The entities may exist, but basically they are not functioning. The one which was most successful at one time reached a valuation of $500 million, but then lived to see its valuation fall to 1% of its peak. So anybody wants to talk to me about the ups and downs of life, I'll be happy to converse separately. There's another one which is about 1,000, 2,000 crores of microcredit through business correspondent model and so forth. But the others are so-so. They are like a couple of $1 million worth of turnover. They're doing useful things. They were pioneers in whatever they did. But somehow I never mastered the art of taking an interesting idea from proof of concept to scale and mustering the capital therefore. So in that sense, the ability to mobilize capital, particularly in today's world when there are so many competing investment ideas, it's very hard. And I have to say that that's something that I did not learn. So anyway, coming back to the generic issue of failure. So inability to mobilize capital is just one of them. But the second is the inability to deal with adequately with the prevailing political economy. And when Emmanuel's talked about, say, the rural health thing, and he said, we have to be careful because it's a sensitive issue. You're talking about people's health, and particularly people in distress. So in general, what happens is, if you're trying to run a social enterprise, normally you will be addressing people who are in need or in distress or in some kind of difficulty. And at the same time, to be sustainable, you want to charge a price for your services or for your product, which makes you sustainable. And in general, there is a contradiction between these two. There are very few cases, in my knowledge, where sustainability pricing is widely acceptable to society. And even if it is acceptable to the end users, interestingly, people who speak on their behalf, namely political leadership, many developmental, non-profit developmental people and others, they think that it is not right to charge full cost pricing, and somehow this should be subsidized. And unfortunately, as a nation, we have become addicted to hundreds of subsidies, whether it's in the agriculture sector, the non-farm sector, the mainstream industrial sector, even our glorious IT sector is actually built on tons of subsidy. Education was subsidized in the early, years. Land was subsidized. There was no tax on the sector forever. So, if you add up all those subsidies, it's billions of dollars. So we have to take into account that the political economy is not always very supportive, and therefore it's not enough to be just a successful entrepreneur. You have to also have to learn to manage the environment. And I tried my best, but at least in case of microfinance, as you know, because of the Andhra Pradesh microfinance law, Basix almost died. And, overnight we lost about 700 crore worth of portfolio, which I spent 7 years turning to banks. So this is all the kind of things that we have to deal with as entrepreneurs. And, it's not always under your control.
Thank you. And I think it's great to kind of hear that from you, because, it's important in this space and generally as an entrepreneur that I think we need to one, obviously mitigate the risks as far as we can, but despite all of that, life isn't going to be a bed of roses, and we've got to deal with what we've got to deal with. Moving to Vidya, to you, and again, probably touching on something which is more at a personal level. You've spent a fair bit of time away from the impact sector, as you said earlier, and then you jumped to the investment side of the story or the impact side of the story. If you were to today kind of look back to those years, and if you were to give a message or some kind of a message you want to convey to them in terms of how can the corporate sector, how can the regular for-profit, IT and other non-IT sector contribute to the growth of micro-entrepreneurship? What do you think they can do which can help grow this whole space?
Interesting question, Vivek. When I look back at those few years, what was intending to be a 1 year sabbatical actually ended up being 3.5. And I had to correct myself actually and come back to a paying gig, so to speak. But it left me with tremendous, I would say, it really changed me. So it left me with tremendous empathy, and tremendous satisfaction. I don't think ever in, sitting at a desk and just being able to get away from your day-to-day life, sitting at a desk, to being out there and being on the field is very, very different from writing checks. I would definitely recommend this to anybody who is considering, doing something for others. Now, in terms of, what the corporate sector can do or has been doing, I'll start perhaps with what it is, the potential that we are seeing in terms of benefit to MSMEs within our own portfolio. I'll start with examples, and then I'll move to, what can be done, what more can be done. So, we have about 17 companies in our active portfolio across Fund 2 and across Fund 3 and Fund 4 that are benefiting MSMEs. And I'll just touch upon a few of them in terms of, helping bring this to life. So Blowhorn is a company we've invested in based out of Bangalore, which is aggregating demand for intracity mini truck drivers who are reporting an income increase of about, upwards of 24-25%. O-Rickshaw is a company, it's a platform that is aggregating e-rickshaw drivers, shared micro-mobility e-rickshaw rides, and working with driver partners in and around Delhi right now, planning to go pan-India. And again, seeing an income increase there. They're also building out a network for battery swapping stations and infrastructure. Again, a lot of potential for micro entrepreneurship there and job creation. Go Mechanic is helping aggregate demand for local, unorganized, I would not say unorganized, but independent auto workshops, and helping connect them to consumer demand through technology. Also helping bring down the costs of their supplies and spare parts. So we've had anecdotes and evidence of local auto workshops benefiting immensely and doubling their income within a year. We have Love Local, which is helping bring Kirana stores online. 98% of them did not have a previous online access. And with COVID that's come in, I think this has become really key for survival. Vayana Network is a very, very interesting company, and I'd like to end with them in my examples. So they are providing or facilitating supply chain financing for MSMEs in 20 plus sectors at a 10.5% interest rate, practically zero NPAs, and about a 98% approval rate. As of March this year, 6 months prior to this, they have facilitated $5.5 billion worth of supply chain financing across these sectors in India. And the kind of data that they have, the ability to coordinate between GST information, supply chain information, the invoices they have, gives a view into the business flow in MSMEs, and it can potentially help unlock microequity that Vijay was talking about earlier in terms of the data and the transaction evidence that exists, which did not exist so many years ago. So there's tremendous potential in helping MSMEs grow and be able to serve larger orders when their capital is not stuck, when there's minimal paperwork required for credit, and the whole process becomes seamless. So these are some of the examples that we're seeing in terms of what corporates or the startup world are already doing. And to refer back to something Emmanuel said earlier, how can this be facilitated for scale? I mean, obviously the kind of capital that's coming into the country in the startup ecosystem and tech ecosystem, that's tremendous. And how do you get to the point where, the scale that Paisa Bazaar has reached, India's largest digital marketplace for business loans? How do we facilitate that? So I think the story there has just begun. We've got very specific sectors. For example, Bizongo is facilitating a demand aggregation and technology upgrade for SMEs and MSMEs in the packaging sector. Now that's very, very specific. There's the auto workshop sector I mentioned earlier. There are e-rickshaws. So we've only just started. Tremendous other sectors to explore, and how do we facilitate this for scale is the big question. How can the government play a role in terms of tax incentives for either investments or companies that are working with MSMEs? And I'll refer back to another point that was mentioned earlier in terms of what are the checks and balances that are required, right? So, can companies look for opportunities, especially in Bharat? There's no question that impact and financial alpha today can go hand in hand. We have proof points from both Policy Bazaar as well as Meesho on that. And another point is, how can industry associations like NASSCOM and CII, etc., play a role where they are beginning to look at responsible companies and stakeholder benefit, etc. Can they inculcate MSME focus as a core part of that strategy, and how will that help out in terms of the network effect that they can build out? But I think more importantly, it needs to be wired into a corporate DNA itself. This is not a question of just CSR, right? It's a question of, if you have MSME business partners or customers, can you look at them as stakeholders? And, does it make better business sense for stakeholder benefit also to come in, for a community orientation to come in? So CSR is really only a very small piece of that. Yeah. And more importantly, I think the final point is on checks and balances. All of this needs to lie on a bedrock of fair practices, fair competition, and responsible business, right? You don't want something like an Uber, which disrupted the independent taxi business to happen. and you want to ensure that there's formalization, especially in the platform economy in some sense. There's safety nets that are available, and that all stakeholders can thrive together.
Fantastic. As I was hearing you, the saying that came to my mind is, it takes a village to raise a child. And I think that's what I hear you say, that we need to build an ecosystem and each one needs to play a role, whether it's the corporate, whether it's the funding side, whether it's the government, whether it's the startup. So fantastic. Thank you. And Emmanuel, maybe if you can also share with us, because you people at Caspian have also been very actively engaged in funding a lot of these opportunities in the market. So what direction is this taking and what's your view on this?
I think at Caspian, we have done fairly little on micro enterprises. Can't claim to be doing a lot, but from my experience of the past, we have built, this thesis of credit-based development as a country itself, IRDP and all these programs. Assume that credit can trigger development, and subsidy could be an alternative to equity. So to cushion that, risks and high costs. But I think credit by itself is inadequate to really build these, particularly in the early part of the life cycle of these enterprises. And there is need for alternative approaches like catalytic capital or micro funding, as Vijay has been saying. So none of the debt providers are willing to accept the simple global fact that 80% of enterprises will fail in the micro enterprise space. And to build that into your program or a project, we have to do something so that the costing is right. And this whole, again, the thesis of, cost of credit being indifferent for a small entrepreneur, which is what the microfinance industry thinks, that its availability and not cost that's important, is again not at all. It's a very wrong premise on which we have built these institutions. So therefore, a large degree of catalytic capital has to come in. The second thing I think we need to do is to take those who are potentially successful enterprises to a scale. So that is where I think the ability to have mechanisms to catch those who have the potential for growth and then putting them on that high growth path will create great degree of employment and opportunities for everybody else, in fact. And that is where I think attention needs to be paid.
Fantastic. Thank you, Emmanuel. And I think, Vijay, that brings me logically to get you to talk a little bit about, you touched about in the first question about this whole concept of micro equity rather than microfinance. And, we need to move away. And I think we are kind of hearing that from Emmanuel very clearly, and maybe also to some extent from Vidya. So what do you think is the new model? Where do you think the world needs to look at differently in terms of how the financing in the future should be for this sector to develop?
I prefer the phrase that Emmanuel used. He called it catalytic finance, because microequity is a particular product. It's, there could be several forms of catalytic finance. In one worldview, even subsidy is catalytic finance, although it has many distortionary effects. So, what I really want to say is that we are right now living in a world where, on the one hand, wealth has got seriously concentrated at the top, and at the bottom there are millions, if not billions, of people who need to be employed, who want to work, and the reality is that a vast majority of them will only be able to be self-employed in all those three forms that I mentioned, whether purely self-employed, whether as micro-franchisees, or whether as micro-entrepreneurs. So, and each of those requires, take the Indian situation, today to create a micro-enterprise job, full-time self-employment for a micro-entrepreneur, you need capital in the range of about $2,000 minimum. And you want incremental employment, maybe an additional, $1,000 to $1,500. So if we're talking of, as you were saying, an enterprise which will employ 10 people, then we need somewhere in the range of $10,000 or maybe $12,000, $15,000. You know, so that's the kind of level of financing. Now, let's say that is, we're talking of 10 to 20 lakh rupees. Now, that is too small a ticket size for today's venture capital world to work in. You know, so we need a new architecture for micro venture capital. And fortunately, the social stock exchange has come up. It has many products that it's talking about. But in terms of a legal form, they have also adopted what is called a social venture capital. AIF category 1. One of its subcategories is the social venture capital fund. So within that, some more regulations should be tweaked so that investments as small as 5 lakhs or 3 lakhs, but in the form of equity, are not just permitted, but they are encouraged. And the exit obviously can't be through the normal exit of an IPO or even a trade sale. The exit would be largely in the form of long-term revenue sharing with a declining share over a period of time. There's a product in Islamic finance called diminishing musharka, which pretty much follows that same principle of profit sharing on a declining basis. And over a period of time, the financier falls off as a partner. So the principle is that if you're sharing in the prosperity of the entrepreneur, then you also damn well share in the risk. A lender does not share in the risk. He simply says you're a defaulter. Even though in the lender's books also there's a hit because it's an NPA. So both sides are suffering. And that's because of the flawed design. As Emmanuel said, if 80% of startup micro enterprises are going to fail, then it is, completely silly to try and finance it with debt. So we need catalytic finance.
Thank you. Thank you, Vijay. And I think the topic is such an engrossing topic that we can probably continue the conversation for very long, but I will take a couple of questions before we are told that our time for this discussion is up. So one question I see here from Prabhavarti Naidu, and while the question is will these digital platforms that are coming in now, and there is so much moving on to the digital platforms, will this lead to rural community becoming extinct, and how do you address this issue? So I'll first let maybe Vijay, if you want to address that, and then maybe Vidya, if you have any thoughts on that.
I think this firmly belongs to Vidya.
Okay, so Vidya, over to you.
I think I've spent a better part of my speaking minutes on talking about how in fact the digital community has been able to give access to markets and technology upgradation and building proof points of data around supporting financial and making micro entrepreneurs bankable in that sense. So I would say that I don't think this is a cause for worry. Probably we can look at technology being disruptors in other ways, right? In terms of automation, leading to change in the kind of jobs that are available and so on and so forth. Sorry, I think, am I audible?
There's some disturbance in the...
the only way to fix this is actually to leave and join back. So maybe I'll hand it back to you right now, Viiveck. I think I've answered.
Yeah. Thank you, Vidya. And I think, to Prabhavati, I think the answer is actually the reverse, probably, that there's a lot of inclusion that can happen because digital platforms are democratizing a lot of this information, a lot of this access. So I think it is, in my own view, probably reversing it. And Vijay, a last question for you would be that what would your answer to a lot of the naysayers be? Because there is a notion, there is a concept when you look at private equity, when you look at equity as a mode of financing, that it comes with very high expectations, and hence, quite often as we hear vulture capital. So when we look at this as a model that you're kind of talking about, or if I may use the word propagating as a way for the future to happen, what would your answer be to those people? How do you address that? Because there will be a lot of people who will be very skeptical about it.
I agree, but there are genuine concerns on both sides, both from the side of those who need the capital, as well as from the side of those who are investing capital. And I think we need to work systematically to allay fears on both sides. And that's why a very good but proactive regulatory platform is required. We have SEBI is a new generation regulator, and even RBI has set up what is called a sandbox, a regulatory sandbox to promote innovations which are not yet fully mainstreamed or regulated, but for a trial basis, the RBI looks at them. So this type of promotion of innovation with regulatory involvement right at the beginning is the way forward. That's the way to, I love the phrase you use. It takes a village to raise a child. Well, it takes a regulatory as well as an entrepreneurial ecosystem to establish, not one enterprise, but a class of enterprises. So if we want to set up a class of micro venture capital companies and then finance hundreds of thousands of micro entrepreneurs through VC, venture capital, then we need serious regulatory involvement and in a proactive, positive way, not in a suspicious way.
Thank you. Thank you very much, Vijay, and thank you very much, Emmanuel and Vidya. I think it was absolutely outstanding to listen to your perspectives. And if I was to very quickly, in a minute or two, summarize, I think one very clearly is that, like I said, it takes a village to raise a child. And I think this sector, if not, many others, requires that. So I think it requires all players in the ecosystem to come together and not just come together, but understand this at a much deeper level, both in the short term and in the long term. And I think new models need to emerge. New models need to emerge, which will help employment generation, which will help impact creation, and which will help wealth creation in the long term, not just for a few at the top, but in a more democratized manner. And I think the last point we did spend a little bit of time is it also does require some policy and regulatory environment that needs to be set up, because this needs to flourish. And I think that's an important aspect. So thank you very much for bringing this conversation, which is a very, very important topic for the future of how we can look at it. What are the lessons we've learned and where should we be putting our energy going forward? It was wonderful speaking to all three of you. And like I said, we can continue this conversation forever, but I think we have a few more interesting speakers which the audience are now looking forward to. So I would take this opportunity and thank Vijay, Vidya and Emmanuel, and look forward to working with you all. And Suren, back to you.
Thank you.